Bitcoin drawdowns, anywhere between 35, 50, 80%. Should we be panicking? Guys, no, we shouldn't be panicking. You need to contextualize Bitcoin, right? Bitcoin is a risk asset that ultimately is cyclical by nature, and it now lives in liquidity. You know, for a long time we thought it had everything to do with the 4-year cycles, but ultimately it's down to liquidity cycles. What really matters, guys, is the multi-year trend and the global institutional adoption. You know, pension funds, treasuries, sovereign wealth funds. You know, Bitcoin's entering the balance sheet of all these institutions and organizations as a complementary and sometimes alternative store of value. You know, gold is mature. Gold is very mature, but Bitcoin has a lot more adoption to go. Real test for me, guys, is not the daily price action really, but it's about the resilience of infrastructure. And what I mean by that is spot ETFs, what condition they're in. It's not a bad place to be right now. Global liquidity, which we know is ultimately, you know, infinite with money printing and what have you, and regulated custody, and that's coming in thick and fast with all the acts and governments getting on board with it. So I think those of you who look at the drawdowns are really missing the big picture. This is an asset class that is in the top 10 already, has had a 400% upside in 5 years, and ultimately has exponential growth. It's what's called an asymmetrical investment, right? So there is downside, but ultimately the upside, when you look at the fundamentals, the upside is massive compared to the downside. That's why Bitcoin's unique.